Here is why the cooling of CPI inflation matters right now. The recent news that CPI inflation has cooled, shocking Wall Street and sending S&P 500 futures climbing, presents a unique opportunity for institutional investors to reassess their asset allocation. Let's take a closer look at the numbers. Gold is trading at $4,339.93, Euro at $1.18, Bitcoin at $89,026.49, and the S&P 500 is priced at $6,782.92. These prices suggest that investors are becoming more risk-seeking as inflation expectations have declined. Now, let's examine the macroeconomic implications. A cooling in CPI inflation has significant implications for yields and the dollar. With lower inflation, central banks may be more likely to cut interest rates, which could lead to a weakening of the US dollar. This, in turn, could boost commodity prices such as gold. Furthermore, lower inflation could also lead to an increase in global economic growth, potentially boosting equities. Looking at the chart, we are seeing a significant consolidation phase in the S&P 500 index. The recent price levels indicate that investors are becoming more cautious, but still holding on to optimism about market performance. Meanwhile, the rise in Bitcoin prices suggests that institutional investors are increasingly seeking diversification and hedging strategies. Final call. We are cautiously long equities with a focus on yield-sensitive assets, such as U.S. Treasuries and corporate bonds. The recent cooling of CPI inflation presents an attractive opportunity for investors to take advantage of the shift towards risk-taking.